Hi, I'm Lena, and welcome to Super Data JP, the channel where we turn Japan's real estate and cost of living numbers into answers you can actually use. Every video here is built on verified government data, not opinions and not guesses. Whether you're planning to invest, relocate, or just curious what life in Japan really costs, you're in the right place. Let's get into today's numbers.
Sendai is the one city in Tohoku that's kept growing for decades. In the newest census, it grew by just 247 people, 0.02%, the slowest since it became a designated city. And the ward with the fastest rising land prices is the one that's actually losing population. Second stop in our new city set, right after Hiroshima. Different story here, not a shrinking city with a growing pocket, but a growing city where growth and price no longer move together at all. This is for anyone comparing Sendai to Tokyo or Osaka as a regional alternative, and for anyone who assumes rising prices automatically mean a growing population behind them. Start with the headline number. Sendai's population hit 1,096,951 in the newest census, a record high, up from 1,096,704 in 2020. But that 0.02% growth rate is the slowest Sendai has posted since becoming a designated city, decades ago. Sendai's long-running story has been one city concentration. As the rest of Miyagi Prefecture stagnates and shrinks, the Sendai metro area keeps absorbing a larger share of the prefecture's population every year. That story hasn't reversed, it's just slowing down, the same way a lot of Japan's growth engines are slowing down at once. That distinction matters more than it sounds. A city that's still growing, even slowly, behaves very differently from one that's already shrinking. Different vacancy risk, different resale liquidity, different long-run rent trajectory. Sendai is still on the right side of that line, for now. Official land prices tell a different, faster story. Sendai's citywide land valuation rose 7% in the latest assessment, comfortably outrunning the population growth rate underneath it. But that citywide number hides something odd once you break it down by ward. 3 of Sendai's 5 wards grew: Aoba, plus 1.5%, Tohoku, plus 1.4%, and Wakabayashi, plus 1.1%. 2 shrank: Izumi, minus 3.2%, and Miyagino, minus 1.3%. Nothing unusual so far, until you compare that to where the money is actually going. Miyagino-ku posted the fastest land price growth of any ward in the city, at plus 9.72%. Tohoku, despite population growth, posted the slowest, at only plus 5.58%. Put plainly, the ward losing population, minus 1.3%, has the hottest land market in the city. The ward gaining population, plus 1.4%, has the coldest one. Population trend and price trend have almost nothing to do with each other here. If you're pricing a ward based on whether its population is growing or shrinking, Sendai is exactly the kind of market that will make that shortcut expensive. So what's actually driving Miyagino-ku, if not population growth? The east side of Sendai Station, inside Miyagino-ku, used to be known locally as the quiet, back exit. That changed with the opening of Yodobashi Sendai, a major electronics and retail complex that turned the area into an actual commercial destination. A 168-unit condo development on a former JR East dormitory site is set to complete in February 2026, and proximity to Rakuten Mobile Park Miyagi, the local baseball stadium, adds another steady source of foot traffic and rental demand. None of that is population growth. It's a handful of specific, large, well-funded projects landing in the same few blocks at the same time, which is exactly the kind of catalyst that can move a ward's price data hard without moving its census numbers at all. For actual condo transactions, we pulled 2024 data across all 5 wards from Japan's land ministry. Aoba-ku remains the most expensive at roughly 366,347 yen per square meter, is almost equal to $2.37. Unlike our Hiroshima video, there's no ward-level overtake happening here yet. The story in Sendai is entirely about growth rate, not absolute price. Izumi-ku, the ward with the steepest population decline, is also the cheapest for condos at roughly 279,147 yen per square meter, is almost equal to $1,704, the one ward where population and price actually do move together. Whatever you buy here, the rental math matters, and Sendai's rental market runs differently from most of Japan. Sendai's homeownership rate is just 46.7%, well below the national average of 61.2%. Its share of private rental housing runs 42.9%, meaningfully above the national average of 28.5%. That gap is structural, not cyclical. Sendai is Tohoku's biggest university and corporate transfer hub, and both groups rent rather than buy almost by default. Students cycle through on multi-year leases, and companies rotate transferred employees through corporate housing on a similar clock, demand that renews itself every year regardless of what the population headline says. That's a more durable demand base for a rental investment than a single new development or station opening. Buildings near universities and the main business districts tend to see steadier occupancy than buildings betting purely on a redevelopment story still playing out. Financing follows the same pattern as the rest of this series. Residents with steady Japanese income can often reach loan-to-value ratios of 70 to 90%, while non-residents typically need far more cash up front, at rates closer to 1.0 to 2.5%. Before you get too focused on Miyagino-ku's momentum, there's a zoning fact specific to its coastline worth knowing. In December 2011, following the 2011 Tohoku earthquake and tsunami, Sendai designated parts of the coastal areas of Wakabayashi and Miyagino wards as official disaster hazard zones. Inside those zones, where projected tsunami flooding still exceeds 2 meters even after seawalls and other mitigation, building new residential structures is prohibited by city ordinance. Full stop, regardless of who's buying. This doesn't touch the Sendai Station redevelopment story at all, that's well inland. But it's exactly the kind of parcel-specific rule a hazard map catches and a listing photo never will, in the same ward that's otherwise booming. Two addresses a few kilometers apart, in the same Miyagino-ku, can sit under completely different rules. In practice, that means checking the city's official disaster hazard zone map for the specific parcel before you sign anything, not just the ward name, not just the general neighborhood, but the address itself. It's a 5-minute check that a surprising number of overseas buyers skip entirely. The broader risk is momentum chasing, buying into Miyagino-ku purely because it posted the best number last year, without checking whether that number is driven by a repeatable trend or a couple of large one-off developments that have already priced most of their upside in by the time an outside buyer hears about them. The most common mistake here is using population trend as a shortcut for price trend, in either direction. Sendai's own data argues against that shortcut about as clearly as a market can. Put it together and Sendai rewards buyers who look at redevelopment catalysts and hazard zoning ward by ward, not buyers who assume a growing city means uniformly growing prices, or that a shrinking ward means a dead one. Next in this set, Niseko, Japan's ski resort investment boom, a market driven by almost none of the factors that matter here. Growth is slowing, but it hasn't stopped, it's just stopped explaining where the money actually goes. Subscribe for more data-driven breakdowns of living and investing in Japan, and let us know which city or topic you want covered next.
And that's today's breakdown. If you're serious about real estate or moving to Japan, research like this is exactly what separates a smart decision from an expensive mistake. Subscribe so you don't miss the next deep dive, and drop a comment if there's a city or word you want us to cover next. Thanks for watching, and I'll see you in the next one.